Okay, welcome back. So, some of the big news here is about Medical Properties Trust and the recent slide in stock prices here on Friday morning. So, we're talking about a reasonably substantial decline here. And this is essentially because of the way in which their two largest tenants here, or two very large tenants, have hired financial advisors for debt refinancing. Now, one of the important thing here is these two tenants constitute essentially over 1/3 of a Medical Properties Trust's revenues, so they are by themselves quite a substantial part of the picture. Now, what they've done is they've brought on some specialists here for debt refinancing. What this means is there's some challenges that investors are seeing here for some of these key tenants, and it's probably a bit spooky. Is it a sign of the tenants being in trouble and needing professional support to dig themselves out of a hole? Or is this just simply a sign of the tenants being cautious and careful and working ahead of perceived problems and challenges? Let's get into that and look at that next. This appears to be the story here that is blowing everything wide open. When something's reported on the Wall Street Journal, it's going to get a lot of coverage, and in this particular case, it looks as though the article is slanted towards a short seller's dream. Essentially here saying that, hey, look, the tenants are hiring advisors for the refinancing, and a reminder that the Medical Properties Trust is also recently downgraded in terms of the credit rating due to their oversized exposure to these small number of tenants. We're back on fast graphs here. I want to have a deeper look at Medical Properties Trust here. Now, it's important to note, as I said, these two tenants are jointly around 1/3 of the total rent for Medical Properties Trust. Now, Squibb has essentially commented to Guggenheim Stewart has reportedly taken on Guggenheim Securities. The comment in the Wall Street Journal article is, quote, that it's customary to refinance any asset-based credit line well before the maturity date. And they are doing so essentially now from a position of strength. I've paraphrased that a little bit, I am so sorry. In addition to that, you've got to remember also they have repaid $100 million of a $150 million loan for Medical Properties Trust. They used the proceeds from the sale of their portfolio of hospitals in Utah. And so I think there's some sensible, logical rationale here, given the tightness of the credit market. Certainly Stewart, I think, is working in advance of the termination date at the end of the year to really look at these loans and really try and get the best deal possible from them. Now, the big question is what's happening here in terms of Medical Properties Trust. Well, if we look down here at the adjusted funds from operations, so this is essentially the price to earnings ratio. We can see here the orange line and the white line. The white line is the dividend payout, the orange line is the adjusted funds from operation. Now, what we can see is we can see here from 2022 to 2023, these lines are converging. The white dividend line is staying stable. It's expected to be maintained, but the AFFO has been revised downwards. Now, we can see here down the bottom 6 months ago, they expected the AFFO to be held relatively steady over the next several years, but now analysts have been revising that down. 3 months ago, they revised it down about 6 cents of AFFO per share. And then previously they revised it down further by another 11 cents. And so we can see a reasonable decline here in the projected AFFO per share. Now that's going to leave the estimated dividend payout fairly tight. Now when the analysts are looking at the AFFO, they're also looking at their ability to collect rent from all of their tenants in the same way. And so when we think about some of these tenant difficulties and the refinancing, the short seller's dream here is that the AFFO is going to drop even further, causing the need for a dividend cut, and that would cause a precipitous decline, I suspect, in the stock prices for Medical Properties Trust, and that is the short seller's dream. What we can see here so far, though, looking at current analyst estimates, is the AFFO will continue to cover the dividend payout. It's getting quite tight here at about 92% for 2023 or 90% for 2024, and that's on the back of substantial declines in the AFFO the question is this AFFO going to actually decline this far, or could it decline further? Now, if it declines further, it's going to put increasing pressure on the company and probably the share price also. We can, of course, look at this in the context of other similar companies. So I've switched here to Global Medical REIT, the same chart of AFFO. Now, what we can see here is actually also a decline in the projected AFFO for GMRE, but it's not as steep as the decline for Medical Properties Trust. And we can also see here that the estimated payout ratio is projected to be slightly better for 2023, and then in 2024, due to the jump in AFFO that's projected, the dividend payout ratio is going to look rather healthy indeed. So when we begin to think about this, it looks like a slightly better situation for GMRE. Now, another company that I do look at from time to time also is Physicians Realty Trust, or DOC. Here as well, when we're looking at this, we can look at this in terms of, again, the AFFO projections, and these are projected to be relatively stable and steady, and that is important to look at as well. I'm going to switch here to the normal multiple for them as well to sort of show that they've declined. Physicians Realty has declined off the normal multiple, which runs at about 18 times price to AFFO ratio. It's currently trading at about 14 to 15 times. And what we could see from that as well is that the AFFO is expected to hold steady, and even though there's a fairly tight dividend payout ratio here for the AFFO to dividends, there's not expected by the analysts to be much of a decline. So if you're looking for stability, I think Physicians Realty is certainly the way to go. If you're looking for stable, reasonable dividend yield, we're not looking here at a lot of projected dividend growth, very, very marginal dividend growth, but certainly I think more stability in terms of protection against downside declines and protection against AFFO declines, and also a reasonable dividend yield that's projected to stay stable. So at this point, I'm looking at MPW, Medical Properties Trust, as a slightly more speculative play. It does have a high dividend yield at present. If they can maintain that dividend, shares bought today will continue to pay a fantastic cash flow over the years. Now that's a big if, given the refinancing of debt by these largest tenants and the ongoing challenges that MPW has had over the last 2 years or so. So hit me up in the comments down below. What are your opinions on MPW? Is this on your watch list? Or do you prefer the look of GMRE or DOC more than MPW? Now that's very much an open question. It's probably going to depend on your particular objectives and aims, but let me know what you think. Let me know which one's on your radar. Now, of course, the other comment here is with the volatility around MPW, I know a lot of people are also using calls and puts strategically to lower the cost basis for their investments in MPW further. So if you didn't have a position, for example, you could sell puts into the future at a lower price, potentially, and therefore you could also recover some of the cost of that investment through the income from the puts. And once those puts have been allocated to you and the shares have been allocated to you and the put is exercised by the buyer, you then have those shares, and of course you can then turn around and write a call against those shares as well, or sell the call option. And again, so that can actually then bring in a little bit of income and lower the cost basis for those shares, and that also can over time improve the overall cash flow opportunities from this investment. And I know that's what some investors are doing. I've got a very small position in a more speculative part of the portfolio where I have engaged in some use of options in this way also to further improve the cash flow from this investment.